I'm catching up with Sean Burns, the portfolio manager of CIE, the Contango Income Generator. Thanks for joining us, Sean.
Pleasure, Peter.
Okay, so tell us how the portfolio has performed over the past month.
CIE was off a little bit, down 0.6. The market was off about 2.5, I think, something like that. So that was a reasonably good performance, and that's on the back, if you remember, last month was a strong month for CIE as well. So it's a good couple of months, I think, overall.
Do you think that the trend is turning in your favour?
I sort of get that feeling. I think I may have mentioned a few months ago, that you get the feeling that CIE was starting to get a better rhythm. A lot of stocks starting to get back in the favour that we, after being through a bit of a hard time, and I think we're starting to see that, which is good.
Okay, so CIE pays fairly attractive frank dividends. How do you achieve this when you're investing in mid-cap companies?
Well, we look for mid-cap companies that pay good dividends and sustainable dividends. And as a group, it's important to get that mix together, that we can get a high sustainable income and a franking bias as well. We explicitly value franking in our process, and that gets passed right through to investors.
Do you think the fear factor around the Trump trade war and bond markets predicting recession partly explains why the market has rushed towards top 30 big type safe stocks? And that in a sense hasn't helped you because you're looking at mid-cap areas?
When people get scared, they usually go to cash, or they go to bigger market cap stocks, which are perceived as safer, more liquidity, etc. So there is a bias in tough times to the larger cap stocks perceived as safer.
So I guess if a positive outcome on the trade front happens, which I think would also help reduce the fears of recession, that could actually favour a portfolio manager like you that's not playing the big end of town type stocks.
Yeah, as people become more confident, they start to open up and work their way down the market cap register, which will help us.
Cash levels in the portfolio moved around a bit last month. Why was that?
Well, what we've noticed over the last couple of results seasons, Peter, is that there's been an asymmetrical outcome on some of the as stocks have gone through their results. So if they have a good result, they may be up a few percent. If they have a bad result, it could be down 20 or 30. So we picked out a few stocks that we're a little bit worried about going into results and sold them down, waited to see how they came through it and see if we're safe to re-enter, so we'd miss that downdraft. So I think that's something that's probably evolved in the market over the last few years. And I think we're sort of adjusting to accommodate that.
And do you think it's worked out well doing that?
I think so. It's always hard, it's always they all obvious in hindsight, but I think, looking into it, from where we were, I think we'll continue to do that as a risk measurement measure. Okay,
give us a summary of winners and losers in the portfolio post-reporting season.
I think for the stocks in the portfolio, there's a bunch of winners there. So Lendlease continued its improvement. As you may recall, we bought that at lower levels, and it's starting to recover. So a big property company had its issues that it's sorting through. Charter Hall is one that we've held for several years now. Property fund manager that did well. Smart Group also hit its numbers. That stock got treated. That is car leasing and salary packaging. It got treated quite harshly a while ago. It hit its numbers, and then it's performed out of that. So people have got the confidence back in that stock. Bapcorp also had a good result, and MyState, I think, was a pick of the banks, a small bank holding in CIE. So a bunch of good outcomes in across the portfolio.
Okay, and if you had to pick a stock out that you really like at the moment that's in the portfolio, which one would you single out?
Those ones who I mentioned should actually continue to do well. Usually when they have good results, they carry on from that. But we have put in a couple of new positions in CIE, and I think that's Origin Energy and Aurora. I think that those stocks have different stories. Aurora has been sold down. It's had a great track record. This has got spun out of Amcor several years ago. We haven't held it before. They're having a flat year this year, so share price has peeled off a lot. So we see there's opportunity for CIE. And Origin Energy, that's been through a lot of hard times. Now its balance sheet's back in shape, and also gives us a little bit of resource exposure, which we like in the portfolio. And we think they're back to investment grade, so that's good.
Okay.
So 2 new exposures for CIE.
All right, Sean, thanks for joining us.
Thank you, Peter.
Sean Burns, the portfolio manager of CIA.